Right, folks. Good morning, wherever you are in the world. As usual, thank you to FX Street for allowing me this opportunity to, try and impart some of my knowledge to all of you guys and girls listening. Thank you also for coming along and listening. I've not done any regular presentations for quite a while now. This is the second one I've done since for a long break. So I just really want to come back to basics and just really get some just basic understanding of what the chart is and just come really back down to trading in its most simplest form. What are we trying to do as traders is identify support and resistance and essentially look for history to repeat itself. So they're the two things we're going to look at today. And as always, with the way that I like to try and do things, I like to try and keep things simple. I'm not going to overcomplicate it. If we're trying to identify support and resistance, and we're trying to look for those locations on the chart where the next something could happen, it makes sense to try and identify where the previous something has already happened. So one of the easiest ways to identify where support and resistance is a significant support and resistance, I'll put that provision in, is to identify where the last big move started. This is where the balance of power changed. This is where sellers said, well, I'm prepared to sell for lower, buyers for lower. The exchange in the transactions is basically the balance of power has shifted from, essentially price at neutral. The balance between buyers and sellers is quite neutral, and obviously it's quite dramatically shifted here. So if we mark off the locations where the balance of power is dramatically changing, it's very easy to do. Just identify where these big moves ultimately start and stop. So I'll just mark these three off for the moment. The next thing I want to do then is, again, just to try and keep it mechanical and apply a bit of a rule towards identifying the support and resistance. Take the bar at the higher the move and the bar at the lower the move on whatever time frame you're on. This is a 240-minute chart. So on any time frame this can be done. Just take that high bar, the high and the low of that bar, and then just take that zone across. And that's going to identify your zone of support and resistance. Again, take the low bar, this moves down, there's the low bar. The lowest bar of the move down is what I mean by the low bar. And then just take that high-low range of that bar. That's where support and, that is as simple as you can make support and resistance. And just for drawing those 2 points on, very interesting what we see already. Got multiple touches of resistance. Again, price going through that location of interest. Now, another thing that you might want to consider is rather than think about support and resistance as an opportunity to buy or sell. When price gets to support, you should be a buyer. When price gets to resistance, you should be a seller. Is it not more important to think of these locations as just that, a location of interest? Just because price is at resistance doesn't necessarily mean you should be a seller. What if price goes through resistance and you've not considered that as a possibility? So to try and not get yourself into one way of thinking, again, just one logic is price at support, it's going up. That is an opinion, a view, a decision, if you like. But to try and remove that opinion is to come up with scenarios. All right, well, price is at support, so the likely scenario might be that price would react to that support. But what about the other possibilities? Price could go sideways and consolidate at that location, and price could go through that location. So what we're trying to keep in mind is the three basic ways that price can unfold at the location of interest. So identify these support and resistance levels. A very simple exercise, a very simple means and method to actually identify support and resistance. And again, try not to think of them as support and resistance. Just try to think of them as like an action zone, the next level of interest. This is where the next something could happen. And again, we can do this on pretty much any time frame. So does this make sense? Again, it's a very simple concept. Identify the thrust move, identify the big move if you like. Take the high bar, the low bar, the high-low range of those bars, and just draw them across. It gives you a zone to be thinking about, well, when or if price gets back there, it could be an interesting place to be thinking about doing something. And what that something is will be relevant or relative to your individual strategy. So keep it very general and loose today. So basically, when price gets to these locations, you might want to say, well, hold on, price is at the location of interest. What's going on there that's, relative to my strategy? When I say my strategy, it could be your strategy, it could be anyone's strategy. It's literally, it's the location that we're trying to find to apply a strategy. Does this make sense? Is everyone happy with the logic behind it? It's a very simple concept. Any questions for the moment so far? Yeah, sure, radio start, sure. I was going to go through another example actually. But you're going to help me. You're all going to help me. So, identify, I've just literally picked random points on the chart. Random points on the chart. So, it's not the most recent price action. So, identify, basically, if you look at the charts, ready, stop. Remember, I'm not going to talk about entry points, and we can come on to that on a later session, but I'll try and give you a little bit of an insight. I'm just literally saying at the moment, with whatever strategy you're using, it needs to be at a location of interest where the next something, the next movement could ultimately happen. So trying to identify a location on the chart where the next big something could happen. That's what we're trying to do. So not necessarily how do I enter at this location, because that could be a moving average crossover, it could be a MACD crossover, it could be a MACD divergence, it could be an oscillator setup, it could be some type of Bollinger Band expansion. There's lots of ways to enter into the market. But what's more important, like buying a house, the location is the key. The location, location, location. So if you can try and anticipate where the next something is going to happen, and that's based on where the last something did happen. So the way that we do that is identify the moves. All I'm doing is take it, I'm just highlighting these so you can visually see these. So we've got a nice trending move there. A little bit of a pause, nice trending move there. Okay? So all I'm going to do is take that bar at the top of the move, take the high-low range of that bar, and I'm going to draw another location across. So that becomes my location of interest. I can do the same at the bottom of the move. Now, interestingly, at the bottom of the move and start the next move, pretty much the same place. So I can bring that location across at that point. And at the bottom of this next move, again, take the low and the high of that move there. The bottom of that second move that we highlighted, take that across. And these are going to identify locations of support and resistance. Again, try not to think about them as support and resistance, but the next location of interest. The next location of interest. Let me just catch up on some of the questions here. Yeah, Bola, clues as to what might happen next and what to do. We're going to come on to that in a moment, so I will cover that question, but that's going to be the next part of the session. How do we go about taking advantage of these locations in a positive way? Again, I don't know. To be fair, Bola, it will be relative to your strategy. Again, we can cover that on, again, different sessions, but right now I just want to try and focus on how to identify these locations. So when you can identify them, again, it's a very simple exercise to do to help you identify these locations of interest. And what to actually do when price gets there. As mentioned earlier, it could be that price consolidates. You could look for a breakout. You could look for, you could basically keep it nice and simple and use that high-low range. Price basically, for example, at the top of the range here, use the high-low range of that bar that you've highlighted. If price goes below the low of the, back below the low of the candle, you could look for short. If price goes above the high of the candle, you could look for long. So again, you can keep it nice and simple. So again, this zone here, price below the low of that zone, price above the high of that zone, look for longs. Again, price below the low, look for shorts, above the high of that zone, look for longs. So if you want to keep it nice and simple, you could do that, or if you want to drop down to lower time frames, try and read what price action is doing, and apply your chosen entry method. There's lots of them about. Again, it could be a moving average crossover. It could be some type of price action pattern. Again, I don't know how you're currently trading at the moment, but this is essentially being presented. It's kind of like a bolt-on exercise. You can bolt this logic onto your current methodology of trading. Jez, I would look back, it depends on the time frame, but I would look back about, on this time frame, I would look back 3 to 4 weeks. And if price isn't at, a location of interest, obviously if price is sold off dramatically and is beyond the last 3, 4, 5 weeks, then obviously go back to where the current price is and then go back across the chart to see where price has been in history. We'll look at that in a moment. So we've got, let's look now at updating charts. So basically price is at support, at resistance, back up to resistance, down to support. So we've got this 12300 here. Price rallies up to resistance. What do you think the most likely thing to happen next would be? Johnny, I don't think it really matters, Johnny. The question was, the more price bounces off the level, does this make it stronger or weaker? I don't think it really matters. Some people will count them. Usually, 3 times tested in a break. Lots of people count them. I personally don't hold much weight on it myself. Again, a lot of people will say, the more it tests, stronger the support. But then there's another school of thought that says the more it tests, the next time it tests, the chances of it breaking, might increase. So it's a bit of a double-edged sword. I'm not too concerned myself. If price goes through a level, you can jump on it. If price reacts off a level, jump on it. So the most likely thing to happen in general consensus is that price would go down. Yeah, price up at resistance. Based on what history's done previously, we can see price making lower highs. We can see it reacted down to support, up to resistance, down to support. And what do we know happened next? Well, price does react. It rolls over and starts selling off. Now, this was the flash crash. This was the flash crash. Now, this supposedly was a shock. So this is back in May. So this was supposedly a shock back in May. So you kind of pulled it all right. Yeah, it could go up and down, Ramel. I mean, that's the point. Price can go up, down, or sideways at any given point on the chart at any moment in time. But what we do know is that when price gets to a location of interest, the next something could ultimately happen. Now, who would have thought that there would be a move, a 15-cent move on pretty much every possible instrument? But realistically, price didn't just roll over. Price, again, think about what happened. If anyone was watching the flash crash when this happened, it was already going down. Price was already selling off. Price was already giving short signals before the eventual panic came into the market. So with hindsight now, at the time, most people were like, oh my God, what's going on? But with hindsight now, with a bit of knowledge about support and resistance under your belt, was this movement a shock? I will rephrase. The size of the move is still a shock, but was the actual fact that price went down, was that a shock? Was that a surprise? Not really. It was the most likely thing to happen based on, what we were looking at, based on history repeating itself. So let's take a look at that. Let's take a look at history repeating itself. History repeats itself over and over and over and over again. Yeah, very pleasant surprise if you're a short radio film, but yeah. But it's just a very simple exercise, Identify where the key levels of support and resistance are. Go back to the other one, you've already put that on there. So identify the key levels of support and resistance. So when price gets down to So price is up at, let's just try and do this on the real part. Price is up at a previous, basically a previous launching point that the price has previously sold off quite strongly, quite sharply before in the past. So what do you think the most likely thing to happen next is? As technical traders, we're looking for history. This is the live chart now, so I don't know what's going to happen next. I've got my own views, my own opinions. Sell off. That's possibly, and this is the best we can say. This is probably the best, that's probably the most likely thing to happen. That's the best we can say. Probably likely to happen. We can't say with 100% certainty that something will definitely happen. Keep that in mind. Never form an opinion. So what we've done is we've got one scenario. One scenario is just based on the fact that price is at previous resistance. Price is sold off a few times in the past at this location. So price is at resistance, scenario 1. Price could go down. Yep. So let's not discount the possibility that price could go up. Alright, well, let's just zoom out slightly. Well, what happened? Let's just zoom out for just a little bit. What if price goes through 1400? Through 1400? What if it goes through that and goes up? Let's not discount the possibility that price can go up. Now, this brings me on to, one of the questions, go back to the clean chart. This brings me on to history repeating itself. There was a question earlier. How can we anticipate what is already or what is going to happen next? Now, I stopped trying to label chart patterns a long time ago. Stop trying to put a label on them. What I mean by label, I'm not trying to identify a triangle, a head and shoulders, any type of consolidation or upwards. I'm not trying to do that anymore. I'm very simply looking to see if there is any point on the chart, looking most immediately at the live part. So looking at the live part of the chart, is there any point on the chart in history that looks similar to what is going on right now? Okay, without trying to label it, without trying to say this is a head and shoulders, this is a triangle, this is a rising wedge, this is a flag, this is a pennant. Who cares what it's called? If you want to know what it's called, you can blow the arse off someone down at the pub. I don't really care what it's called. It's not going to make you a better trader. What's going to make you a better trader is knowing and anticipating what price might do based on what history has done previously. So let's just zoom in slightly. Let's just zoom in slightly. So what I'm looking at is these two portions of the chart. Now, does this portion here, does that portion there look similar to this portion here? Does the next part there look similar to this portion here? So does those two squares, those four squares that I've just highlighted, I don't know what it's called. You know what? I don't even care what it's called. Who cares? Some smart ass probably knows the name of this pattern. I don't know. I don't care. I don't want to know. But does what is happening right now look similar to what's happened previously? That's all I'm interested in. It might not be an exact fit. Might not be an exact fit. So where are we at? We've got box 1, looks the same. Box 2, looks the same. Where are we at? Where are we at in real time? This is the part, the circle I'm drawing now. That's the part of the chart we're at in real time. That's where we're at. Is history repeating itself? What do you think? This is nothing magical, this is nothing mystical, this is just very simply, does the right hand side of the chart on the hard right edge, does it look similar to any point in history? That's all I'm doing. Nothing magical, nothing complicated. So the circle that I've just drawn, that's where we're at now. History is repeating itself. So far, we've got history looking exactly the same as the current moment in time. So with that in mind, what do you now think the most likely thing to happen next? You can't think for certain, but what is the most likely thing to happen next? Based on history repeating itself, what's the most likely thing to happen next? Wallop. Big move. Could go up. That's the best we can say. Okay, could go up. It's not a certainty. Keep that in mind. Could. Not definitely. Could go up. Price can go up, down, sideways at any moment in time. So keep this in mind. Come up with scenarios. Scenario 1, based on the fact that price is at a previous point where price has sold off. Yeah? That's scenario 1. Price is back here. It could sell off. We know that price has sold off to 11400, 1300 location in the past, and it might do that quite dramatically once again. Scenario 2. Scenario 2, based on history repeating itself, we've got the two portions of the chart looking quite similar to each other. Quite similar. So assuming that history repeats itself, should price go up, then we're looking at potentially an exponential movement. And if history does repeat itself, what have we got? About 4 cents worth of movement, 400 pips, potentially on offer, either up or down. Now, so 2 scenarios. So price can go up, price can go down. What's the other one what's the other scenario that we need to consider? Price goes up, price goes down. What's next? Sideways. Yeah, price can go sideways at this location. Would it be fair to say that price is already going sideways? It's got a slight upward bias. If you wanted to put a label on it, you could call it perhaps a rising wedge. But would it be fair to say that it's already ranging slightly sideways? Price has not really done very much this week at all. That'd be a fair comment. Yeah. So price is, rough around the edges. It's not quite the stereotypical consolidation that we can see here, for example. But, we've got a slight upward bias. If you wanted to put some trend lines on, if you really wanted to put a label on this, a slight rising channel. It's consolidating. It's like upward bias, consolidation, rising channel, wedge. Who cares what it's called? Do you think it'd be fair to say that price is slightly biased with the trend still, but generally consolidating? The price already going sideways at this point. Okay, already going sideways. So 3 scenarios covered. So now what we've done is we've covered the basis for the eventualities. We've not formed an opinion. We've not said price is at resistance. I'm going to be a seller, and then be shocked as anything when price goes up, wondering what to do. Conversely, if you decided to be a buyer at this location based on scenario 2. Scenario 2, oh well, that looks fantastic. Door number 2 looks great. It's going up. I'm only going to be a buyer and I'm going to make 400 pips. Aren't I going to be fantastic? Blah, blah, blah. Oh, bugger, it's going down. Now what do we do? So we've not formed an opinion. Price can go up. Price can go down. Price can go sideways. It can do a combination of all those things at any moment in time. So never ever form an opinion. Do the homework. Do the analysis. Come up with scenarios. When one of those scenarios unfolds for you, you then deploy your strategy. So let's give ourselves some framework. Who cares what the pattern's called? If Price is at a location interest. Yeah. Price is at a location of interest. Yeah. This is the analysis that we've done. This is where I'm interested in doing something with euro yen. So is everyone with me at this point? This is the location. Identify a location of interest. Yeah? Point number one. Identify a location of interest. So everyone's happy that this is a location of interest. I'm not trying to label a pattern. I don't care what anything's called. I just know that price has pushed away from this location quite strongly in the past. It might do it again. That's what I'm interested in. What's price doing at this location? Well, if history repeats itself, scenario 1, price could sell off. Scenario 2, looking for history to repeat itself, price could go up. So there is a conflict there. But is there a conflict? Well, no, what we're saying is now we've got two scenarios. But if price goes up, if price goes down, price is mainly sideways. But do we want to get involved with the sideways? Alright, fair enough. If you're a range trader, you might want to. So let's come up with a scenario now. Okay, let's try and think about how to actually get involved. Let's pick, if price goes up, just zoom out. Price goes up, we've got around about 11400, 11470 there. Okay, there's just a little bit of resistance. That's where these moves ultimately started to the downside. So I think it'd be fair to say that if price gets through that location, around 11400, just generally speaking, let's just call it 11400. If price goes through 11400, we've got a lot of free space up to, these next resistance levels. 122 could be in mind. Just looking at where the middle of the move just started, we could be looking at 1800. So if 11400 price goes through 11400, based on our expectation of scenario 2, in that price, assuming that it does go up and history does repeat itself, then we've got the potential for a 4-cent move. That'll take us up to 118. Now let's think if price goes down. Well, price has got a bit of a struggle to go. Previous consolidations. I think it'd be fair to say that if price does not repeat itself on this historical pattern here, the point where I'll be proved wrong is going to be 111, about 111.50. Let's just put 111.50. So 111.50. So should price go up through 11400? Looking at a 4-cent move towards 118. If price goes down through 111.50, pretty much looking at that same sell-off. So if we get that movement there, a similar magnitude of movement down through that previous support, we could be looking at again around about 108 to 107 location, which rather interestingly is where the last move up started. Does this make sense, folks? Have we done anything complicated or magical or mystical? Have I baffled you with any nonsense? What have we very simply done? Identified where the last big move started. From that, we identified some key locations where price has previously turned or pushed through. We can see right now that price is at a location of interest. And what do we do with that? Well, this becomes the place to deploy a strategy. Whatever your strategy is, it's the place to deploy it. Now, I'm not trying to form an opinion in any way, shape or form. We're now looking for history to repeat itself. Scenario 1, if price goes down, as it's done previously from this location, then I would be looking to be a seller. Between the very latest, the more conservative option would be below 111.50. Scenario 2, looking for history to repeat itself. We've got some supporting evidence from the beginning of last week and the week before that price might go up. history so far is repeating itself. Now this for me looks pretty good. So should price go up and history repeat itself, we've got scenario 2. So we've got an upward scenario, a downward scenario, and for the moment price is just hopping between the 114, 1300 locations. It's already going sideways. So should price go up, where could it get to? Previous resistance, that big move down, I appreciate I've maxed it out, but previous resistance up at the 1800. Should price go down, looking at where price previously started on this move up, looking between 108 and 10700. Neutral zone between 114 and 111.50, looking a bit messy, and stay away. Nice and simple. So does this make sense, folks? Any questions? Any questions? Let's try and finish this off. Any questions? It's a very, very simple concept. Identify support and resistance. Think of them as a location of interest. A location of interest. And then try and think about the three scenarios, the three basic scenarios of what could happen. Never form an opinion. If price goes up, down or sideways, what is the plan of action? When one of those scenarios unfolds, you take action. You might see multiple scenarios unfold. So firstly, you might see scenario 1 unfold, but then price might turn around and then scenario 2 unfolds. Now, because you've thought about the possibility that price can go up or down, or and up and down, then you will be prepared for the possibility that something could happen. If you just form an opinion that price will go down, if price goes up, you will be unprepared for it and you will make mistakes. As simple as that. Just see, so Japanese, let me go. You know what, if price goes, I don't really care, just about the Japanese intervention. Banks and governments have intervened many times in the past. The Swiss most recently, it will fail. When they run out of money, price will do what it was going to do originally. It's as simple as that. When the money runs out, what was happened previously will carry on. Nothing more. That's what normally happens. Look through history. What happened earlier in the year? The Swiss bank was doing the same thing, propping up the currency. When they ran out of money, what happened? What was going on previously continued. Simple as that. That's what will happen next. When price goes up, buy it. When price goes down, sell it. Depending on your preferences, when price is range bound, you might want to adopt a range bound strategy or step away from the market. It's as simple as that. You can overcomplicate this game far too much. It goes up, buy it, down, sell it. 15-minute time frame, let's take a look at, actually I was going to do the same thing, let's take a look at the 60s actually. Take a look, I had the dollar yen prepared. Looking for history to repeat itself, just one more time. This is a 60-minute chart for dollar yen. 60-minute chart. Looking for history to repeat itself. Now what caught my eye on the dollar yen today was firstly, I've already put this previous, I've got a fib on here as well, we can see 50 and 61% level. Previous day's highs, these small solid red lines. Now what caught my eye is this little spike up here. This little spike up there. What's this over here? Is this a little spike up there? Is that possibly history repeating itself? What could happen next? Most likely scenario is that history repeats itself. If it does, price will come back to where it started from, around 8,300. But firstly, price will probably go sideways for the rest of the day. But nevertheless, regardless of whether, but then think about it, that's the most likely scenario, assuming that history repeats itself. Assuming, let's not discount the possibility that price is at support and that price could go up. If price does go up, have you got a scenario, a plan of action in place? Or scenario number 3 is the price moves sideways at this location. I think that the sideways will continue for the rest of the day and we'll see any further trending movements develop Monday. So my preference is sideways followed by trending movement. And again, I don't know if it's going to be up. I don't know if it's going to be down. I haven't got a clue. I really don't know. But I do think that sideways first, probably for the rest of the day, before seeing some further movements, probably on Monday. But for me, just assuming that history repeats itself, the day will be sideways. Does that make sense? Harmonic patterns, again, don't really care. Who cares? Price goes up, buy it, down, sell it. Sideways, typically a wait. What I'm not trying to do is overcomplicate this. You can draw multiple harmonic patterns. I'm not saying they don't work. I mean, I know some, I think Derek Fro's very into his harmonic patterns. Fantastically, very knowledgeable about them. But, you know, it's not for me, not my sort of thing. Keep it simple. Simple works. Price at support. Rather than think about buying support, think about, well, what's going to happen next? Alright, well, to be fair, dollar CAD's not one that I typically look at, to be quite frank. But nevertheless, dollar CAD, what's going on? Price, this looks quite similar. This looks quite similar to what's developing right now. So what might develop next? Again, possibly a bit of a sell-off. Just looking very simply for history to repeat itself. What time frames do I work on? I work off 8 hours, 60-minute charts, and tick charts personally. But I mean, you could look at 15-minute charts. The same logic works on. Let's put a 15-minute chart on the dollar CAD. 240 is not really showing me that much. Ooh, yeah. So 15-minute chart, 15-minute chart. So again, where did the move start? Where did the move stop? So again, just doing the same thing on a 15-minute chart there. You know, these things just look uncanny. Start the move, end of the move. On the 15-minute chart, this is looking like a nice little reversal buy. So this is the 15-minute dollar CAD. Price back down at support. Previous buying pressure has come into play at this location. But it's looking quite an interesting buy patch. Potentially targeting up at 103.40. We've got about 20 pips to go from current levels of price activity. The risk reward is pretty crap on this, to be honest. Anyway, that's it, folks. That's me done. Very simply, identify support and resistance. Identify the thrust moves. When price gets back there, think about scenarios rather than come up with an opinion. Look to see if there's any areas on the chart that look similar. Will history repeat itself? And come up with 3 scenarios at the very, very least. If price goes up, if price goes down, if price goes sideways, what's your plan of action? You cover those elements and you will not go far wrong with your strategy. Any final questions before we wrap the session up, folks? Yes. Long story short, I do this daily in my own live room. So, in front of an audience every day. Anyway, that's me done, folks. Thank you very much for your time. My name's Philip Newton. You've been fantastic, and I believe I will see you all next time.